before we actually get into some charts, is that so I've been in this opportunity for about a little bit over a year. I started last June, right? Basically, I got obsessed with the fact that I wanted to find out a good way to make money from my phone, right? It was my first year in college, so I got obsessed with looking at it. So every time I got home from class, I'll be right in front of the computer, looking for ways to make a phone. All I got was yo, do some ads, download ads and stuff like that. Nobody want to do all that type of stuff. But eventually, after a year of college, I got introduced to Forex, decided to drop out of college, and then fast forward a year later, still fortunate to be trading Forex, not working a job, none of that. You know what I'm saying? And blessed to actually be able to share some knowledge, most definitely. So with that being said, yo, let's get right into some stuff. Yo, has anybody ever heard? I got a couple different ways I can go about this call. Has anybody ever heard of quarters theory? Drop like a 1 in the chat box if you have. Drop a 2 if you haven't. Okay, cool. Has anybody ever heard of quarters theory? Okay, cool. 1 kind of, 2 kind of, but they don't know what it is. All right, cool. All right, cool. All right, bet. So guys, what I actually wanted to do, because I know how I have an idea of how to code a trade and everything, so I actually just wanted to have a system that I know is reliable, definitely reliable. Basically, a system. I wanted to teach a system that could actually enhance your trading that you know. So, of course, okay, 2. All right, cool. So look, guys, if you want to get better entries, yo, quarters theory, it can explain it all. It can explain it all. And like I said, I can go a couple different ways about this call, but I'm gonna choose quarters theory. Maybe in the near future I could be able to choose something else. But right now, I just feel in my heart that I need to choose I just need to choose quarters theory. All right. So guys, make sure you're taking notes, because definitely note takers are money makers, no doubt. All right, cool. Here we go. All right, bet. So we about to get right into it. So quarters theory basically states that the market moves in 250 pip ranges, right? Really 1,000 pip ranges, but it's broken up in quarters, right? 1,000 pips, right? Broken up in quarters is 250 pips, right? So check this out. You have 1,000 pip range, right? So look, you want to find what? A whole number, 1,500, right? Perfect example. You can measure 1,000 pips. 1,000 pips from here will be all the way down to 1,400, right? So this is called quarters theory. You just break it up in quarters. These are called quarter points, right? So check this out. Quarters theory is basically saying that, look, the market moves in 1,000 pip ranges, all right? But it actually has to take a breath. It can't just keep shooting up. You know what I'm saying? Well, it can technically, but it's not going to do that. It's going to take a large amount of money to do that. I can explain that here in a second. But check this out. What does the market do around these areas? Just check it out. Look, literally, just scroll back. What does the market really do around these areas? Why does it like these areas so much? People might call them whole numbers. People call them key levels of resistance and support and everything. Exactly. The market likes these levels for some reason. All right. So cool. So basically what this says is, like, check this out. Whenever it comes up, this is called a major quarter point, 1,500. This is called a major quarter point, right? And then every quarter point in between is called a large quarter point. Major, large, 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 and then you have another major right here. That's 1,000 pips, right? So then anything in between is a large quarter point. Make sure you write that down. Cool. So check this out. How are you going to trade off these quarter points? All right, bet. So check this out. Didn't you notice that? Let me go ahead. Okay, so look, we're on the 4-hour time frame. Let me go to the daily. All right, bet. What you're going to notice around these major quarter points, like this 1,500, you're going to see a market formation like around them, in or around them, right? So all you got to do is think like this. Who is moving the market? The banks. I'm a high believer in the banks, right? Thinking like the banks, the big boys. It takes 10,000 lots to move the market by 1 pip. So you know how these institutional traders actually have it. So if you want to be successful in the market, you gotta switch your mentality to an institutional trading mentality. You have to be like, well, hey, if I was in a position, if I was the banks and the only way that I can make money is to make retail traders lose money, what would I do at this point in time? Right? What would I do at this point in time if my option, if the only way I can make my bank, my institution money is to make institutional traders lose money, I'm going to have to make them make choices. Exactly. You're going to stop everybody out, make them make bad choices. They're going to have to make them make bad choices, right? Remember this, behind every single trade taken in the market is what? Behind every single trade, 100% of the time, 110% of the time, I'm going to take it there. Behind every single trade is a trader who believes they're going to win. If you really think about it like that, is a trader who, there is no trader in the world who's, let me place this buy, I think it's going to hit stop loss, but let me place it anyway. No, they're placing that trade expecting for that thing to hit take profit, no matter if it's losing or if it's going to win. All right, so what does that mean? That the banks just have to make them believe, right? Believe in it going up or down. They really don't care. But this is where these quarter points come in handy. So check this out. At these quarter points, this is where large money is at the market. A lot of money sits at these markets or at these market levels. A lot of money sits at these levels, right? So you're going to notice a lot of market patterns pop up around these large quarter points, aka what do you see right here? A clear, boom, head and shoulders. Been tracking this thing for like 3-4 weeks now, right? Cool. Because check this out. All this is support and resistance. If you know support and resistance, guys, you can get sniper entries every single time. It's like right in front of your face, right? Check this out. So look, a lot of people see this. Well, okay, it's clearly a level of resistance. Clearly. Exactly. Okay, cool. This is clearly a level of resistance, right? So what is everybody going to be doing? Selling. They're going to sell right at this level. We call that dumb money, right? We call dumb money is doing the obvious, right? Dumb money is doing the obvious. Always think of smart money as the bank. Smart money is the people who side with the banks. If dumb money is going to do the obvious, because if dumb money sees it, if retail traders see it, if we see it, the banks see it, it's obvious to everybody. The banks see it. All you have to do is just flip your mentality, and this is a good time to think of, okay, what would I do if I was the banks? If I wanted to make somebody believe something, if I was going to ultimately do something to make them believe something, guess what? When everybody's selling, guess what? They're gonna get it a little temporarily. You see it wick down. They're gonna get a little temporarily, and then what? Break above. Oh, okay. Now they're in trouble. Now they're in trouble. Okay, cool. But around all this, I'm just being patient, right? I'm just being patient. I spotted a possible head and shoulders. It was around this point right here, this area right here. And then after that, I just followed it. All since then, you don't have to trade all this. When you get experience, like I heard Dakota say that there's experienced traders online. Of course, if you have experience, you know how to trade all that. Okay, cool. Yeah. If you think like the banks, exactly. All right, cool. And then you got your little head. All right, bet. Coming right back down to this level. What are we all taught? Break and retest, right? Break and retest. Do the obvious. Everybody is taught break and retest, right? Didn't you get a break of support? Didn't you get a retest? And then weren't you supposed to sell? And then what happened? Drove right back up. It's the bank's game. It's a way of doing business, shall I say? It's a way of doing business. It's the bank's game. Trading is 90% mental, 10% technical, because everything's obvious, of course. So it's 10% technical, of course. So it has to like the challenge has to be somewhere. It's in the mental. It's the mentality of it. It's in your mental. It's in the brain. All right. And then cool. Drove price right back up. It's a way of doing business. Exactly. Drove price right back up. Everybody stop losses. Boom. Got hit. All right. Cool. And then you got your little short. Right. And then what happens? Everybody starts jumping into the market. Want to sell? Guess what? Drive it right back up. Shoot. It's really some sauce. Sheesh. It's really some. This is crazy. All right. Should I drop this thing? All right. I think I got you. All right. All right. No filter. I got y'all. Let me turn this light on. All right, cool. So I guess we're about to take it there. All right, bet. So guys, get your pen and papers. Get your pen and papers, because I don't think that y'all gonna want to miss this. Right? I started talking about the banks. Right? I started talking about the banks, and it just I can't talk about the banks without talking about the full story. Right? It's always two sides to the story. Right? So what I was teaching, boom. Okay, cool. You got quarters theory. Right? So all you gotta do is just boom. What do you gotta do? Basically, wait for some little formation, right? After that formation is complete, cool. What are you taught to do? Sell on the right shoulder of the head and shoulders, cool. You could have caught some pips, cool. Came up here, retested, you could have sold. You take profits. You can have big take profits like this. When you get in at a quarter point, how do you know to get in? Of course, break and close below after all the obvious stuff has happened. And then cool, your take profit is going to be what? Almost 250 pips away at the next minor quarter point right here, right? Not right on it, of course, right? Because I'm going to tell you right now, whenever it comes down here, the spread's going to widen because everybody's take profits here. Obvious, of course. So I'll put my take profit about probably 20 to 40, 50 pips away, right? Depending on when I'm trading. Like 50 pips on here on gold is nothing. So I can put my TP like 50 pips away because when it comes down there, the banks know that all these TP orders is right here. So they're going to widen the spread. Have you ever noticed that, yo, it came in and waked your TP and then now you're either still in a trade or it went all the way in a drawdown or it went all the way to your stop loss, right? It's because your take profit was in an area of, it was in an area, a popular area, all right? But cool, so check this out. So look, I want y'all, I know this is gonna help y'all trading. It's gonna help y'all trading, and of course, probably what y'all already know. So I want y'all to look. Remember this. Anytime you come to the market is in one of three phases. All right, the market is in one of three phases. Okay, and your effectiveness as a trader is going to depend on how well you can duplicate what I'm about to show y'all. Okay, this quarters theory similar to round psychological numbers. Yes. Yep, they call them psychological numbers because these are all psychological levels in the market. Everybody knows about it's all psychological, right? But yeah, it's all the same thing. But quarters theory is literally like the original. Everybody just went off and then branched off and then named it a whole bunch of different things. But it's really called quarters theory, and there's a book of it. There's a book about it. I forgot the author's name and the creator of it, but I know there's a book on quarters theory. All right, cool. So look, the market is in one of these three phases, all right? If you look at my chart, what is one thing I do not have? I don't have any indicators. I trade with no indicators, right? I trade with no indicators. And I'm gonna tell you why, because when I'm about to show you, indicators actually hide when I'm about to show you. Very well. Why? Because you're supposed to be paying attention to the market. And if you're paying attention to these indicators, you know what I'm saying? Because you have an indicator for a reason. You have an indicator to try to predict the market, right? We don't want to predict the market. We want to listen to the market. We want to listen to what the market wants to do. All right? Okay, cool. We want to listen to what the market wants to do. We don't exactly. Indicators lag anyways. Indicators are bad at they're bad at what they're made to do. They're made to predict the market, but they're actually bad at predicting the market, right? Because you're not supposed to predict the market. The only way that you can actually listen to the market is if you and the market is face to face, right? What looks way better? This right here, right? What looks way better? This right here, or if I just start adding a whole bunch of indicators on here, right? And then I just start getting all these. What looks way better, right? It looks like I can't even breathe. It looks like I can't breathe. So indicators literally hide when I'm about to show you. Okay, so if you're gonna adapt what I'm about to show you guys, you gotta get rid of your indicators. I'm sorry, not sorry, but you gotta get rid of your indicators. Definitely. All right. So look, remember the phases, right? Phase one. We're about to talk about phase one. All right. So I'm about to go ahead and go to like this little black area over here. We're not about to look at the marks right now with all the noise. All right. Cool. So I'm about to see if I can get this out within the next 15, 20 minutes. You know what I'm saying? Because I know Dakota probably want to get some other stuff out. All right, so cool. Let's get it. Phase one. We call this. Hang on. Let's delete all them over there. All right, bet. Phase one. All right, we call this contraction. All right. What is contraction phase? Well, this is where the market is just ranging from 2 price points. Exactly. Way more clear setups. Okay, cool. So this is where price is basically consolidating between 2 price points. This is called contraction phase. All right. This is phase 1 of the market. So what do I do when I find contraction phase? I box it in. I box it. I'm gonna show you why in a minute. All right, cool. So I box it in. I found this contraction phase. All right. And look, this is the market setup. Everybody has their setup, right? I say that like with quotations, right? Everybody has their setup, but that's being selfish. Nobody can have their setup. The market's the market. We can't control the market. So when the market sets up is when we should be setting up. We don't control when all this happens. We just respond to it. Like I said, we want to listen to the market. Don't try to predict the market, right? Because when you're doing your setup, guess what? You're in a state of predicting, right? We don't want to predict. We want to sit back, be calm, and don't react. We respond. It's way more calmer, right? So you want to listen to what the market wants to do. All right, so look, this is where everybody is in agreement at. Everybody's in agreement at right here, right? So why do I box it? All right, so let me go ahead and get my horizontal ready, right? And I'm gonna place it as best as I can in the middle of the box, as best as I can. All right, and why do I do that? Because I just projected average price into the future. Like I said, this is where everybody's in agreement at, okay? So look, if everybody's in agreement at, right, everybody can agree that if it's ranging between these 2 price points, the average price is going to be dead in the middle right here. So if I put a line dead in the middle of the box as best as I can, I just projected average price into the future, right? And all I did was just box in my consolidation. This is called the tipping point of belief. All right. Now remember, this is the market setup. This is called the tipping point of belief. Now remember, I said the big banks. Remember how I said that how the banks, it's a way of doing business. All they want you to do is make a choice, right? So if everybody's in agreement right here, right, and everybody's saying, well, this is average price, right? Like I said, this is called phase 1, which is contraction, right? Okay, cool. Boom, contraction phase, right? If everybody's in agreement, if everybody says, okay, this is average price, we're about to go to phase 2 right now. So what is it? This is called expansion. In expansion, it just expands the range a little bit further. So in expansion, write this down because this is very, very, very important. Everybody misunderstands this first coming out the box. In expansion, expanding the range, they're going to expand up and down, right? So say it expands up. Okay, cool. It expands up. This is the first part of expansion. It still has to expand down, right? So I'm about to explain this to you right now. This is called expansion. This is the expansion phase, all right? And what's so special about the expansion phase, right? And write this down early too, and put like an exclamation point next to it, because phase 1 and phase 2, you do not want to trade in these. You do not want to trade in phase 1 and phase 2. And like I say, at any given moment, whenever you come to the market, 24/7, well, 24/5, because now 24/7, because in any market, so Bitcoin 24/7, right? Any market, this shows up in any market on every single time frame, all right? Indicators hide it like a mug easily. All right, so cool. Phase 2. You do not want to be trading in phase 1 or phase 2. This is where I said dumb money gets beat up. All right. So expansion. Okay, cool. What's happening over here? All right. So you have 2 sides to the story. You got dumb money and you got smart money. All right. So dumb money is going to be doing what? According to average price. If you're a new trader, an amateur trader, someone who follows the market, you know what I'm saying, who has no patience, which is majority of the traders. This is a $6.6 trillion a day market. It's a lot of traders around the world who are not experiencing this, who just heard about Forex, you can make a lot of money, so they're just using it as a gambling ticket, right? So what are they going to do if they see it break out to the upside? And this is average price. Well, they're like, oh, according to average price, right? If it's above what we call what? The tipping point of belief, their beliefs are now shifted to what? The upside, right? So dumb money is going to be doing what? Buying. Exactly. Smart money is going to be doing what? Smart money is the banks. And whoever sides with the banks, they're going to be doing the opposite always. They're going to sell. You're going to see this pattern play out 100% of the time, all the time. They're going to sell. They're going to do the opposite. They just caught their beliefs. What are we doing in the market? We're not measuring with no technical stuff. We're measuring beliefs. We're measuring beliefs. Everybody now believes that's going to the upside, right? A lot of buyers is hopping into the market, dumb money, following the market, right? So then what happens? Still, second part of the expansion has to come and knock out this low. All right, cool. Boom. And then what do you think is going to happen? If their stop losses haven't got hit? Almost. Close. But they are taking profit from all these buyers up here, right? But their stop losses aren't hit. How much you want to bet? All of these buyers either got out, right? And if they didn't get out, their account is blown or whatever the case may be, right? But then not only that, their beliefs are shifted, right? They start selling, right? And smart money start buying. All right, cool. And smart money start buying. All right, bet. But they don't just buy like they sold here. What do? They're gonna buy up rapidly. This is phase 3. This is the trend phase. This is where the banks take profit. All these sellers, all these mad used to be buyers, right? Hopped in for the sales, right? You know what I'm saying? And then all these people who's taught also to break and retest sales, a lot of sales, right? Smart money is accumulating the opposite position. Anytime it's below the tipping point of belief, you want to be looking for the buys. When it's above the tipping point of belief, you want to be looking for the sales. Because smart money is always going to be doing the opposite. And then guess what? After the trend phase, it's going to be repeat. That's one market cycle. Phase 1, phase 2, phase 3, and then repeat, right? You might see a little bit of fluctuation, and then you're going to see the contraction. Your job is, when you come to the market, find the last contraction phase. And if you can't find a contraction phase, your tipping point of belief is not going to work. It's going to work like a charm if you can find contraction phases, right? Where it's going to work like a charm. I think it's going to work like a charm, dude. All right? Not even going to lie. So look, what you got right here. It's on the daily. It's on the daily. Bet. You got your consolidation. You got your contraction. Right? All right, bet. It's clear. So what am I going to do? Project my tipping best as I can in the middle? All right, bet. We had breakout to the upside. What you think dumb money was doing? Buying. Dumb money was buying. Okay, cool. Smart money did what? Sold. Okay, cool. What are they doing now? Now guess what? Smart money bought up a little bit. What you think is next? It's about to be the trend phase. It's about to be the trend phase. It's about to be the trend phase. Trend phase literally next. All right, cool. So how am I going to trade this? So look, I'm not going to lie. Check this out. This is 95% accurate. 90% of traders lose money because they fail to see this pattern, right? Banks use this pattern all the time. It's a way of doing business. They don't care what side you choose. You know what I'm saying? You want to choose the side of smart money, always. You can trade expansion when you get experience with this, but what you really want to do, you want to trade in the trend phase. All right? How can you trade in the expansion phase? I'm going to show you the trend phase. I'm going to show you one that's already played out. All right? So how can you trade in the expansion phase? So when it expands up, oh shoot. When it expands up, all right? When it expands up, guess what? You want to look for some sort of resistance, some sort of structure. Support and resistance will really pay you when you understand this pattern. When it breaks up first, you know that it does not want to go up. They just want to capture some dumb money, right? The banks is going to literally stop at support or resistance, right? At this point, it's going up, so you're going to be looking for resistance. You have freaking resistance / support, right? Nice. You could have entered that position for a sale. What am I going to do if I want to get a guaranteed take profit? And I'm spilling some real sauce right here that I'm not even supposed to be spilling right now. But how are you going to get a guaranteed take profit? Place it at the bottom of the zone, because this is second part of expansion, remember? Second part of expansion. And if they absolutely want traders to believe, right? Look, I'm exposing the banks here right now. I'm exposing what they have to look in our minds. We think that the banks are invincible in the trading world, that they can do whatever they want and shit on our parade, right? All the, you know what I'm saying? Which in a way they can all the time. But when you understand that when the banks have to play this off of beliefs, right? When you have to play this off of beliefs, they have to make retail traders believe it's going down, that they're going to capture them as a seller. If they're going to make them believe that, what do they have to do? They have to break the tipping point of belief downwards, and they have to break the bottom side of this range. That's the only way they're going to capture those sellers' beliefs. Because at this point, if they bought up here, they're still over here hoping that, hey, maybe it's going to hit support and then shoot all the way back up and then go snap my take profit. They have to crush their hearts. They got to crush their beliefs. In order for them to do that, they have to go back on the other side of average price. So I just exposed y'all what the banks literally have to do in this point. The banks have to break this if they're going to capture some sellers' beliefs. That's the only way. And the only way I know that is because I used to be on dumb money side. I used to be like, okay, bet I'm not going to sell until it breaks what? This support. And then retest the support, and I'm going to sell. And then cool, I get what I want temporarily. And then I wake up in the morning and my take profit or my stop loss is smacked. And then this is gold, and this is on the daily chart. So then I'll be hurt because that is a ton of pips, dude. It's like 300, right? That's 300 pips in the opposite direction. You know what I'm saying? I'm just like, oh, dang. Well, maybe next time, right? But now that you know how the banks play their game, now that you know how the banks play their game, yo, let's have a little fun with this. Let's have a little fun with this before I hand the call back over to Dakota. So how are you gonna trade this? Right? How are you gonna trade this?
Before you start, I got one question.
What's going on, bro?
What time frame would you look for this on? The daily? Because I see that you on the daily. Well, not even 4 hours, but you would look on it on the daily majority of the time.
Okay. So check this out. It can be personal preference. So right now, what I'm about to do, I'm about to show y'all a trading plan of how you can use which time frames, right? So yeah, technically, this pattern, bro, is going to be way stronger on higher time frames. It plays out on all time frames, but what I'm about to do right now is about to answer your exact question. It's crazy how you asked the question, and bro, I'm about to actually show y'all exactly how y'all can, like, which time frames to use. So bro, just sit a little tight. Here we go. Let's get it. All right, bet. So how can we use this in our trading plan? All right. So boom, find your contraction. Right. So this is called, write this down. This is called trading with directional bias. Trading with directional bias. What is bias? What does bias mean? Right. So bias means that you're looking at something one-sided. If my family member gets into a fight with somebody that I really don't know, I'm going to automatically take my family member's side because I have a bias towards them. I love them. I have a freaking life with them, right? I look at things one-sided already. Well, I don't know you. Why are you fighting with my family member? I'm going to take my family member's side. But what if both of your family members, are fighting, right? And you love them both equally? You're gonna be a little confused. You're like, well, okay, y'all handle that. Y'all handle that yourself. You know what I'm saying? This is called trading with directional bias. So when you trade like this, this is actually good to have bias. I don't think it's good to have bias in the real world, but in the market, in using the strategy, this is good to have bias. So what does that mean? That if you're thinking it's gonna go to the downside 95% of the time, right? You're thinking 95% that boom is gonna go to the downside. Boom! Oh, I'm about to spill this sauce. All right, let's just get right into it. Check this out. So cool. I got my contraction on the 4 hour, right? Agreed. Got contraction. What am I going to do? Tipping point of belief. Perfect. All right. Now let me zoom out. Now remember, this is the head and shoulders that I was telling you about. So I'm already expecting, okay, cool. I think it's going to go down because head and shoulders do what? It go down, of course. So in my head, look, check this out. In everybody's head, their if they're expecting a head and shoulders, they're probably going to expect, okay, bet shoulder, head, okay, and then drop. So I'm selling it all the way down here, and then shoulder, and then boom. They're probably expecting that. But you see, this is kind of an ugly, long, played out head and shoulders. You got to go to a higher time frame to even see it clearly, right? Because the banks is low-key hilarious. All right, so check this out. Like I said, if it breaks to the upside, you don't want to go with that. You don't want to go there. You don't want to go there. Why? Because that dumb money is buying right now. They are buying like crazy, and they're going to get what they want temporarily. But they're looking for these highs to get breaking. They're looking for these highs to get smashed. Their take profits is way probably freaking in outer space somewhere, right? Especially on the 4-hour, going crazy. Smart ones probably take profit up here. All right, so what is smart money going to be doing? Like I said, look to the left. What happens in the past must happen in the future. Must happen in the future. So look to the left for resistance. Happens every single time. And what did it do? It also made a market formation up here. You're gonna notice that. It's gonna go up, make a market formation, and be around support / resistance, right? Made a double top. So that is on the 4-hour. You could have entered 2 times. Because best believe it, if I ever go in and draw down using this strategy, I'm entering more positions. That's how much I trust the strategy. Because this is all I use. Like I said, no indicators or nothing. No indicators or nothing. So look, you got perfect resistance, sell. Perfect resistance, sell. Even if you sell right here and you took a little bit of drawdown, if you stay patient, which I highly preach that, highly recommend stay patient always. All right, sell again. And then guess what? If you want to guarantee take profit, what do you gotta do? Take profit right at the bottom side of the range every single time. Every single time. It never fails. It never fails. And then you'll take profit 2 and 3 if you want to be like that. It could be at these other ones, right? Because you're gonna be risk free. Best believe you're gonna be risk free by now. You better be risk free by now, right? And then you'll take profit 2 and 3 can be all at the bottom of the support / resistance is over here. All right, cool.
All right, I can say one thing to make
What's
sure.
up?
All right, first, what you'll look for is like the consolidation phase, like that's the small box right there. You wait for a breakout, like, and then you'll wait for like a market formation, a double top or whatever it forms, and then it'll drop.
Yep. Exactly. Yep. And then I also look at resistance. I'm looking to the left, always at resistance. Because that's how I know where I'm going to enter the market at, always. I know I'm going to enter at support or resistance. I've told myself that I'm not going to enter the market unless I'm at support or resistance, right? So if I'm looking to the left, I know where I'm going to enter. All I got to do is be patient enough to wait to get up there. And then look, man, a double top, it just confirmed it. You're going to see this play out. It'll probably be a low one, and then it'll shoot back up a little bit higher, and then it'll drop. And then down here, it'll probably make boom right here, come back up, make a little lower one, and then it'll shoot up, right? Yeah, you'll be seeing that a ton, especially because like if you're aware of this now. Okay, cool. So look, we trade with directional bias, so the fun not over. It ain't over. It ain't over. It's probably about like 5 minutes from over. All right, cool. So we on the 4-hour. So what's this mean? If this pattern show up on all time frames, bro, this is on the 4-hour. If this is selling. Yeah, M's and W's. That's cool. Heck yeah. You on it right now. M's and W's. That's all the market makes. M's and W's. Double top. What is that? A M with a double bottom. A W. Head and shoulders. Special type of M. Right. Okay. Cool. We on the 4-hour. So look, if the 4-hour is selling, you already have your bias. Okay, this is going down. It's going down. It's going down, bro. As long as this is selling on the 4-hour, this plays out on all time frames. This is directional bias. Let me highlight this so I don't lose it. Okay, cool. So I'll drop down to the 15-minute. Look, your 4 hours, your confirmation, right? Look, your 15 is your entry chart. Because I'm going to tell you, you're going to see this pattern pop up a million times on the 15-minute. All right? A million times. So check this out. As long as that 4-hour is selling, let me delete that too. Okay, cool. These are your initial entries. Boom, 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 boom. All right? These are initial entries right there. So let's have some fun over here. Okay, cool. What are we going to do? We found it. Contraction. All right. Okay, cool. There we go. Sheesh. Need some water. All right, bet. Okay, cool. We got our contraction. What are we going to do? We already have our bias. What is our bias? The downside. We're looking for that thing to go to the downside. Already walked y'all through that. We saw the head and shoulders up earlier, right? So we're looking for this thing to go to the downside, right? So what does that mean? That your entries automatically come from whenever the market is above your tipping point of belief. What do? Look to the left, resistance. Look at that. That's an entry. That's another entry. Perfect. Look at that. Perfect. You look to the left, resistance. How can I make that up? And I just showed y'all every single time. Look, check it out. Check it out again. Boom. We can find another one. Contraction. I call contraction when you have two taps at least to one side. So you have a tap over here, and then you had to come in here, and then you had a tap over here again. Okay, cool. That's contraction. And then guess what? Your tipping point of belief, dead in the middle. Guess what? You had your little baby breakout right here. And basically, if you look to the left, guess what you had? Support. Ooh, that is another entry. If you wanted to. If you know what I'm saying? If you wanted to. You don't got to be satisfied with just two entries. You don't got to be satisfied. Dissatisfaction is a state of creativity. I don't know if people know that. For real. Okay, cool. Look, check this out. We got another one. So you see, you're manipulating literally all of these legs. As long as you're going to the 4 hour and you can literally tell that the 4 hour hasn't turned against you. Because basically you know, but you already been in hella profit by then. Cool. What do? Tipping point of belief. Boom. What do? Look to the left. You have resistance over here. Clear resistance. It came up here. Another entry. That's all I'm doing is entering on the top side tipping point of belief because I have my buying or I have my bias at selling. So anytime it come up here, I can get another entry. Ooh, came out entry. Payday. It's too easy. Guess what? Above the tipping point of belief. This is how it works. The tipping point of belief. Everything revolves around the tipping point of belief. So if you can effectively spot a contraction phase, your tipping point of belief is going to work like a charm because this is where people's beliefs is going to get tipped one way or the other. The banks use this every single time. Every single time. And you can use this on any market.
One more question before I go. The tipping point of beliefs are always going to be inside the little box of consolidation.
Yeah. You said on the side of it?
No, I'm saying it's like the box. So the tipping point of beliefs are always going to be inside it or in the middle of it.
Yeah, exactly. Of average price. Exactly. Because you got to think of it, bro. If it's average price, that's a point of control. Everybody's going to grasp that average price because they're going to be like, okay, well, I feel comfortable right here because this is where the market was sitting still at. So I'm going to react according to this. If it start moving down according to that, I'm going to look for that sale. You know what I'm saying? So everything revolves around that contraction phase. Everything revolves around it. So definitely, yeah, you got it, bro.
Gotcha.
Does anybody got any more questions? Any questions? Yo, I'm at your disposal right now. I'm feeling generous.
Appreciate it.
Nah, no problem at all. Sheesh, look, check it out again. Contraction. Work like a charm. This is gold, so you know it was a payday. Look, tipping point of belief, what happened? That money started buying. Look to the left. You could have sold in this expansion. I don't. If you're new to this, I don't consider you trading expansion. You're gonna get a payday in the trend phase, no matter what, bro. But in expansion, I'm not gonna lie. It's fun getting that guaranteed take profit in expansion. All right, it's a guaranteed take profit, bro. Because guess what? It came through and it smashed it. Take profit. How many pips is that? That's the perfect entry. Cool little 28 pips. Cool little 28 pip snipe. And then cool. Your big payday is a trend phase right here. Right to the upside. Right to the upside. And then 9 times out of 10, you're gonna check it out like this. The trend phase is gonna be 3 pushes. Look, you see that 1, and then it moves sideways a little bit. 2, move sideways, look, and then 3. And then you're gonna get your little wild movement. Right? You're gonna see that all the time. All the time. 1, 2, 3. But y'all can see that thing played out like a charm, bro. Anybody got any questions before I hop off this thing, man? For real.
Hey, good night. So your method, can someone use that to swing as well?
Yeah, you said what, bro? I couldn't hear you for a second.
Yeah, can someone use your methods to swing trade?
Oh yeah. You can use it to swing trade, definitely. Yeah, definitely. You can use that swing trade. You can use it in any trading style if you want to, because bro, it works on any time frame, definitely. Most definitely work on any time frame. Anybody got any more questions? Sheesh. All right, cool. All right, bet. So I'm gonna just take it as I explained it to T, and y'all can we see it on US 30? Okay, I just now saw that. All right, I got you real quick. It worked. Sheesh. All right, let's see what that looks like. Okay, cool. Ooh, look at that. That's crazy. I think I had this thing drawn out. I said it was going up. I think it went up. When did I draw this thing out though? All right, cool. All right, bet. We're gonna restart it. We're gonna redo it. All right, bet. Here we go. As you can see, the thing was playing out on the daily. You see how and then you think it's shooting up. Guess what? It had a point of control. It was right here before it expanded. It expanded down. You don't want to go down. Look. The more you spot this, the more you spot it, dude, you're gonna be able to spot this thing without even marking the thing up. It get that nasty for real. You don't even gotta mark it up no more at that point. Once you get good at spotting it. But check it out. Below 10 point relief, you're not looking for that sell. Look, you look to the left, you got support. Crazy, you got support. You got support. You would have entered right there. And then you would have caught all that. And the TP1 has yet to get hit. But it's gonna get there. Yep. You came right up to it. I'm a fan of, if you see it right here anyway, bro, you better be taking profit. You better be taking profit. Definitely. But look, your trade is automatically about to get 90%, 95% better if you can comprehend this. But let me see if we can find some more. We on a daily. Let's see if we can find some other. Let's go to the 1 hour. Delete that. I don't know. I like the 15 minute. Let me go to the 15 minute real quick. Because I know this thing, maybe spin that thing on like crazy too. Yeah, here going one. It's a perfect one.
You could try the 5 minutes as well.
You said what?
The 5 minutes.
All right, yeah. Yep, definitely 5 minutes. I can jump down there right now too.
As well.
Cool, thing want to believe? Boom, boom, boom. Ugh, crazy. Sheesh, what the thing? I just lost that thing. Ah, there it go. There you go. Easy money, bro. I'm telling you, yeah, bro. I'm not gonna lie, bro. I am not gonna lie, bro. When I first started using this, I'm not gonna lie. It did take me a week because I incorporated, like, I put a little twist to it from when I first learned it. But when I first really started, like, I'm not gonna lie, it kind of scared me. It kind of scared me how easy that thing was coming. I was like, sheesh. How would you be able to tell if it's not just break and retest? Oh yeah, I don't even look at the break and retest. In order to look at the market this way, you gotta let go of looking at it like break and retest. I can't even, like, I train my eyes to look at it like this. I can't even tell you. I mean, I can physically go back and look at break and retest, but all I see right now is the pattern. This is boom, boom, and like, I measure beliefs now. That's it. I measure beliefs. Definitely measure beliefs. Boom, look to the left. Resistance. Cool. Look to the right. I mean, look to the left again. Oh, you have some resistance over here. Okay, cool. Payday. Payday. Remember I told you 1, 2, 3. The biggest pushes is going to be either 2 or 3. It'll either be a big push on 2 and a smaller one on 3, or it'll be a medium one on 2 and then a bigger one on 3. What they say? All right, cool. I think I'm show the 6.